All right, we are live one more time, and this is AURA8 with the legendary Michael Terpin back in one more time. Michael, thank you so much for joining us again, and I love your shirt. Is do we consider the Bitcoin spring is here with your shirt?
Now, spring happens at the halving, or if you get a new all-time high before the halving. No, we are at the end of fall and the start of what I call Bitcoin winter, which is the slow road back to the next bull market, to the next all-time high. But technically, when you hit the bottom, you are in the new bull market, even though it starts out very slowly. And it now looks, I'd say, about 80% that we hit the bottom on July 1st at 57,000 and change.
July 1st.
Yeah, so remember we had the dump during June, and at the time I said that that one was the first one that was potentially a bottom because it didn't bounce back, and
Right.
it still wasn't the length of the average one, which has been about a year, but it was, it was 9 months. That's better than when Michael Saylor and others were saying that the bear market was over in February, and 4 months did not seem rational to me. It seemed, in fact, there were some people that said the bear market was over in November when it was like not even like 6 7 weeks because it went from like 126 down to like 80. In both of those instances, in both November of last year and in February of this year, you had a big drop, but then you had an immediate rebound. And in February, I believe it came back like 10% the next day. That never happens in capitulation. When capitulation happens, which has happened every time to finish off a bear market, it just sits there and lays there for a couple of weeks. And that's what happened in June. So we had all the other necessary ingredients. We were below the 200-week moving average, which we were not in February. And but we were in June. We went all the way down to 57 and change. But we were down in June from the moment that it crossed into the low 60s because, again, the moving average, as moving averages do, move, right? So it moved up. So in February, the moving average was below 60K, whereas in June, it was above 60K. And so, but that's sort of what has happened now 4 out of 4 times that, the bottom hit when we were below the 200-week moving average. Now, there are a few other things that had happened every time prior that made me believe that there was only about a 40% chance that the bottom was and again, I say July 1st because that was when you actually got the lowest point. Not the lowest close, that was in June, but the lowest point. And when you say what was the low for the cycle, I don't look at the close. Some people do. I just say, what's the lowest it got, even if it was a wick? For example, when you say what was the lowest price in the COVID crash, it was like 3,000 and change. It didn't close there, but that's what it went down to in a wick. And so July 1st was the day that we got down to, I think it was 57,100, and and that was it. I mean, a lot of people were saying, oh, I mean, Michael Moore from Bloomberg thought it was going to go down to 10,000. There were some other people that said 20,000. I was on a panel with Bobby Lee after that, even in August, during Rare Evo, where he thought it was going to go down to 25K. And, and they were all wrong, right? I mean, well-intentioned, but wrong. Look, I still thought there was a 60% chance that it was going to go lower for a few reasons. Number one, it's almost always been about a year. The last 2 times it seemed to be getting even more narrow of a range. It was a year to the day for 2022 from the top. It was a year minus 3 days in 2018, and it was over a year by a couple of weeks in 20 ended up being 15 because it passed from like end of 2013 to beginning of 2015. So it's a little bit of a surprise that it ended up so early, but it makes sense now for a few reasons. Number one, some of the things that always have happened at the bottom that did not happen this time, the balanced price, the realized price, these are also technical metrics. I think the balanced price was 53K. I thought it was probably going to get down to that on the final, final leg down. The realized price, I think, was in the low 40s. And the other one that happened every time was the coin value days destroyed which is another technical metric that was around 43, 44. I think it got up at 45 when we actually hit the bottom. But the reason why I'd say those didn't prevail um, was the thing that I poo-pooed for the reason why some of the institutional maximalists, as I call them, said, "Well, we're never going down again. It's going to be all up because it's all institutions now." Well, we're not all institutions, right? The majority of Bitcoin holders are still the early whales, the ones that have been long-term holders. If you look at just the long-term holder versus short-term holder, which I think they have a break of about 155 days differentiates that. I don't know why they picked that amount of days, but they do. It's still majority individuals. It's people who bought, at 1,000, at 5,000, at 10,000, even at 50,000, but more than a year ago. And that's still a lot more than the ETFs are still only about, I think, 7% of the overall supply. And Sailor alone is pushing up toward 5%. But still, that's not a majority by any means. Now, so that's why institutions haven't taken over. However, they are big enough now to influence. And I would say that one thing that skewed the coin value days destroyed number was that you don't see on chain what the ETFs do, right? So they're moving around off chain, and OTCs are off chain, so you do end up seeing a little bit of skewing of some of the technicals that relied on purely on chain movement because some of it's not on chain now. So that would be sort of the explanation about why the 40% chance that I had predicted at the time in June held and not the 60%. The other one, of course, as I said last week in our extended session with Dr. Ben, was that we did have what I call a white swan, just like we had a black swan with the 10/10 events that really kind of guaranteed that we got out at the start of the kind of period that the bubble always pops versus the middle or the end. Here we ended up like we were still in, I'd say, the range of the, and I've been saying that for a while. We were in the final phases of the bear market because we were below the 200-week moving average, but it could have gone, considerably lower if we had some bad news. Because as I mentioned in my book, here it is, Bitcoin Supercycle.
Bitcoin Supercycle.
Those are your fans that don't have it yet. Available on Amazon and select bookstores. Simon & Schuster distributes it. Basically what you have, take a sip from my Bitcoin cup here. Was, a white swan. So an unexpected piece of good news. And that was, I was at Jackson Hole, Wyoming for the SALT conference when this happened. We ended up having between Tuesday and Wednesday of that week, so it'd be technically the last week, week before because we're now on Sunday. The president held a crypto summit. He's done this before, and usually when he holds any kind of crypto gala ball, which he didn't even show up at, and he announced the Trump coin. He said a couple other things that were sort of described as crypto summits, and nothing happened, right? He just said, hey, I'm pro Bitcoin. I'm the greatest Bitcoin president ever, et cetera, et cetera. This time he said the Genius Act was named after me because I'm a genius. You didn't want to call it the Trump Act. And, and we weren't expecting anything that would move the markets. And instead we did get it. We got three things that basically coordinated to very rapidly, move the price up. The first was the day before. And that's when the CTFC and SEC chairmans, Atkins and Selig, basically made a kind of a joint proposal. It was mainly CTFC, but for Reg Crypto. So Reg Crypto is interestingly named because it's sort of like a variation of like Reg D, Reg A, plus Reg CF for crowdfunding. And it is for token sales, right? So if this passes, it's got 60 days of comments now. If it, sort of passes muster and it actually becomes new policy. It's not a law, it's not Congress, but it is kind of a policy of the SEC and the CTSC agreeing on. You now basically have what can be a new rebirth of the ICO market, as we used to call it, because token sales under Reg Crypto will now be legal to do and regulated in the United States by the SEC and CFTC. And there's two flavors of it. One is called, well, they're both called Reg Crypto, but the $5 million exemption kind of emulates the thought process behind Reg CF, Reg crowdfunding for equity, meaning that you can go and raise up to $5 million from little guys and not accredited investors. And then there's Reg A plus, which is a way of going public. You really is self-directed IPOs, and you can raise up to $75 million. So remember those numbers because they were used in Reg Crypto. Reg Crypto says you can now do a token sale, which is not a security. The way they describe it, it starts as a security in terms of the action of you selling it, but once you actually sell the tokens, they are not securities. And so that's something that the SEC has toyed with over the last few years in terms of when is something a security and can it stop being a security at some point? And so they're codifying this now. And they're saying that if you're an American company, it has to be a company, it's not going to be an individual. And I don't think they have any provision for DAOs or foundations, but you don't really need one. We'll see what the final rules say. But it can be a company. So you're an LLC in Wyoming or Nevada or Delaware or wherever you want to be. Please don't do New York or California. You're going to pay a lot more taxes. You would then be acting as a security to sell the tokens. But when you sell them, they're no longer a security. Because if they were a security, they couldn't go on a crypto exchange, right? Because they would be a commodity. I suppose an analogy would be a gold mining company. And I've used this analogy before to describe portions of the Howey test, which is the Supreme Court case from the 1940s that described, what the difference between a security and the non-security is, using the Howey Fruit Company versus the SEC, or rather the SEC versus the Howey Fruit Company. The Howey Fruit Company had tried to do a variation of what vineyards have done for hundreds of years, which is doing what they call wine futures. Despite the word futures, they're not securities. A wine future is when a vineyard goes and says, we're going to pre-sell you the wine. You're going to give us the money up front. We're going to use that money to buy the barrels, buy the wine, and you're going to get a discount on the wine. So if something, if Screaming Eagle goes for, $1,200 a bottle, and you're going to commit to a case or more, you're going to get it for $1,000 a bottle. And that's considered not a security for a number of reasons. But the main one is that there's 4 points you have to be a security. And the one that basically means that wine futures are not, because there has to be an expectation of profit, a common enterprise, blah, blah, blah. Is that an investment of money? I think those are the other three. Is that if the price goes up, is it because of the representations of promoters or management, or is it because of a change in the native asset as determined by independent parties? I know it's a mouthful. I call it the gold mine versus gold bar test. If you're a gold mining stock and you say, hey, we just discovered a whole new, area with lots of gold in it, we're going to become super rich, and ends up not being true, ends up we thought it was gold, it really wasn't gold, etc. And your stock goes through the roof and you sell some. That's considered a forward-looking statement that is determined to be a security that you're making representations, and you can get sued on that. Whereas a gold bar, if Peter Schiff goes out and says, buy gold, it's going through the moon, it's going to be $20,000 by the end of the year, and it's not, you can't sue Peter Schiff because he does not control the value of gold. He might have a lot of it, he may sell it, he may make profit on it, but he does not control it. It's controlled by an independent global marketplace, right? Same thing with wine. If you buy wine futures and you get shipped the wine and it's horrible wine, maybe you got a claim against them under the Federal Trade Commission. They said it's wonderful wine and they knew it was a bad year or whatever, but it's not a security, because if the wine, you think it's worth $1,200 a bottle, ends up being worth $600 a bottle, or it's a wonderful year and as it ages, it goes up in value. That's not determined by the promoters of the company. That's determined by the marketplace. That's concerned to people like Robert Parker and other wine connoisseurs who gave the rankings. So with the red crypto, what's happening is interesting. Is the gold mining company that makes the gold bars or the process of the gold bars, they're a security, right? But the gold bars that they sell are not a security. So I think here, that's the analogy here. So you can go and issue as a security while you're issuing it the XYZ token. But then once it is out and you've stopped selling it directly, it's a commodity, which also means it's taxable. You have a gold bar and you're selling gold jewelry to someone. That's a taxable event. It's a product effectively. And whereas with security, it's a net operating loss. If I raise $5 million for my startup, I don't pay tax on the next $5 million in profits because that's called net operating loss. If I make revenue of $5 million, I pay on that from dollar one unless I have something offsetting, expenses and net operating loss. Similarly here, I think what's going to happen is companies will go out. This is what I would do, and what I would advise companies that I work with to do. Go and raise your equity first, right? Go and raise your equity. You say you got a startup that is in crypto, and you plan to have both, an enterprise that's going to make money on your community, in fact, actually, if you use the Ripple model, I believe they every time they issue tokens, they basically consider it to be profit, at least in the early days. I'm not sure if they still use that same accounting mechanism, but you would basically be issuing tokens. That would be your profit if you're issuing them directly. But if you raised money for other reasons, just growth of the labs, hiring developers, etc., and you had $5 million net operating loss, and then you had $5 million in profit, they would offset each other. So these are things the accountants will figure out. I think that'll be a boon for the crypto markets. I think it'll be a boon for the states that have zero tax, state tax that encourage crypto. And I'm certainly recommending that Puerto Rico not add extra laws because we're the lowest tax. We don't pay the IRS. We basically, if you're down here under the Export Services Act, we're 2 to 4%. So that's in fact, I've discussed this with the governor. So we'll see if what happens. So that was number one, was that. And then number two, of course, was Scott Bessent, doubling the amount of buybacks of bonds, and ultimately saying he could spend up to $1 trillion buying back long-term bonds. And those two really kicked off the market, I'd say.
Now, how would you define Warsh's speech on the 28th, but in Donald Trump's style?
Well, Warsh,
No. Hold on. I
you
said
mean
in.
Bessent, right? I mean, Warsh just
No,
basically had a little bit of a nothing burger this last week. He was mildly hawkish, but didn't do anything.
he also kind of spoke about how he did have a talk on the 28th, right?
Well, his
Uh,
most recent one was just the other day.
yeah,
Warsh,
yeah.
Warsh,
So
Warsh was on the 20. It wasn't the 20th. It was like the
28th, yeah.
28th. Yeah.
28th, yeah. So how would you like? What would you, or rather, how would you define his impact, but in Donald Trump's voice and in Donald Trump's style?
You want me to do my Trump impression?
Exactly.
Yeah, it's too early in the morning over here to do my Trump impression, especially if I'm trying to
Okay.
parrot, Warsh. No, I think Warsh, for the most part, Warsh basically, he said early on he's not going to really guide the market. He's not going to really go and say what he's going to do before he does it. And That's similar to like Google and some other places saying they're not going to forward project revenue numbers and earnings and things like that. On the other hand, if you
Right.
look at the mainstream economy, Nvidia just came out with like almost $100 billion of revenue in a quarter. Everybody was flipped out that that Anthropic was the fastest growing company in the history of mankind. It was going to be doing 100 billion in a year. How about Nvidia? 100 billion in a quarter. It's over $1 billion a day, and they're projecting because they did say they're going to project 70% growth next year. They're going to be close to $2 billion a day, and yet the stock is trading at a PE of 12. If you look at their chart, the last 7-8 years, it's just like this. And I think they're not getting an awful lot of love, even though they are the top. No, I think what that shows is that the AI trade is still healthy and real for the time being. I mean, there will probably be some kind of you know bubble that happens there, but it's not happening now. Um,
You
you
know,
know,
okay. You named Walsh a horseman of the bull market because
no, no,
he
no. I did
wanted.
not say Warsh. Did not say Warsh. Did not say Warsh.
You
I
mentioned
No, no, no,
four
no, 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 no.
four
Warsh does not.
horsemen.
The four horsemen. Roll back the tape. The four horsemen
Okay,
of the bull
okay,
market.
okay,
The four horsemen of the bull market that I said last week was Trump, Selig, Atkins, and Besant, not Warsh,
okay.
the
My
Treasury
my bad.
Secretary. He was the main one. He was the one that basically. I mean, that's when the market started moving up, started ripping. Was when he announced the same day of the crypto summit, but earlier in the day that they were going to start, printing money to do buybacks. $1 trillion here, $1 trillion there. Soon you're talking real money.
Absolutely, especially when America is in a debt of $40 trillion, as we mentioned earlier. Uh, let's talk about. You said a retrace was coming, and would it go below 70? We are now about at 77,500. You're still right, but does Fridays change your two-third odds that
I think it's
June
been
was the
holding up
bottom?
remarkably well. I still think we're. I said that I did not think we're going to do a full retrace because most rallies retrace completely. I do not think we're going to go back down into the low 60s. I think that would require some extraordinarily bad news. I think that right now, we're talking week and a half out from the initial pump. We're still at the 78, I think it is, fear and greed, and that's just remarkable. We've had now 2 weekends to digest the news, and neither one of them has pulled back significantly. I mean, the lowest we went down was I think we went into the 76 range when War spoke, and then it came right back again. As I've said repeatedly, the magic number for this whole cycle has been 75K. When on election day, when we broke the new all-time high of 73,850, when we went over 75, we never looked back, right? And I mean, other than we got to the bottom of the bear market, and that was sort of a big thing, getting below 75 to get there. And when we had Liberation Day, when we'd gone all the way up to almost 120 on inauguration day, and then Liberation Day with the tariffs, we went all the way down, almost hitting 75. And now that we're coming back out of the bear market and we're over 75, I think that's going to be a big point of resistance. So as long as we stay over 75, I think that there's no looking back, and we're basically in the bull market for the next 3 years. And it'll be interesting because if we repeat the sort of and again, 3 out of 3s don't always happen 4 out of 4. We saw that with the 1 year effect of being length of the bear market. But we've had 3 out of 3 now that we've had within days of 35 months from bottom to top. And the fact that we didn't have a full year of top to bottom means now that July 1st is the bottom. And if we go and repeat the 35 months to the bubble popping, that would put us in Q2 instead of Q3 or Q4 of 2029. And that would be interesting, right? Because, the 4-year cycle, you know, Like they used to say about, I think it was the Miami Dolphins defense the year that they were undefeated. They bend, but they don't break. I would say the same has been true of the 4 year cycle. It bends, but it hasn't broken yet.
Interesting. And do we officially declare the meme coin season is here now?
I would not declare that the meme coin season is here now, just because a few of them have gone up. No, I don't. I don't think we have a meme. I think you're having a rotation, and that happens when things flatten out. I mean, a lot of times, and a couple of memes are doing well. Trump coin, of course, is doing well. But yeah, no, I don't think just because a couple of ones had double-digit gains that that's any kind of like, I mean, you look at someone like Brett Coin, which was up to a $2 billion market at their peak. They're still crushed, just because you're rebounding 10 or 20% or 30% from the bottom that you're already down like 90 something% doesn't mean that you're having a meme coin season.
A lot of people are going to be really upset because they were hoping that the meme coin season will be back with the reg crypto coming into play, but uh, it
Oh,
is
Red
what it
Crypto
is.
could definitely. Well, here's the interesting thing. I mean, meme coins typically the way that they're structured aren't part of Red Crypto. They would not do it under Red Crypto. I mean, meme coins typically, the exemption that they look for is the collectibles, right? So they're not. I mean, the Red Crypto is for more traditional, kind of protocols and utility tokens, as they called them before. I think now they're calling them tools, and commodities. Uh, you know, Meme coins are not commodities and they're not tools. They're collectibles. And so they typically have not required that exemption because the classic meme coin is not issued by a company, and it's completely fully issued, right? So,
Right.
so it's out there, and then the founders just kind of buy it back, as opposed to they don't collect anything from it. In other words, it's just all out there, and it's just in the treasury, and it's been weird. I mean, they've never quite defined exact exemptions that meme coins have gone under, other than early on in the first kind of set of definitions that the SEC and CTFC under Trump have agreed upon a few months back. They said there was 5 categories, and one of them was collectibles. And collectibles are not regulated by either the CFTC or the SEC, because they're not a security and they're not a commodity.
Okay. Since we are now almost at the 27th minute mark, I would love to talk a bit more about tokenized. There's a lot of noise about tokenized. Can you tell us a little more about it, and why should everybody be paying attention? Because people are already paying attention to it.
Sure. Sure. So Tokenize is the uh, high end crypto investor conference that I've been running since 2014. It's the oldest running, continuously operating crypto investor conference. It was originally branded as Coin Agenda. We rebranded it when we started doing more tokenized securities and real world assets. That was in, I believe, 2024. And it was a spin-off of BitAngels, which I started in 2013. So BitAngels basically, oldest, largest, kind of global network of founders meeting funders in the Web3 space. We're in, I think, 41 cities now, and we it was interesting. We sort of like would go and have these BitAngels meetups and BitAngels breakfasts at other people's conferences. And I remember in early 2014, we all tried to get together during the Inside Bitcoins in New York. And it was a horrible rainstorm, and like nobody could make it. They couldn't get a cab. And I'm like, I think we need to do our own BitAngels conference. And so instead of calling it BitAngels, because I wanted to do things other than just pitches, I called it Coin Agenda. And Coin Agenda, of course, has had a long storied history. We've had everyone from like, Charles Hoskinson do keynote, and also Jeb McCaleb, founder of Ripple and Stellar and Mt. Gox, and number. We interviewed John McAfee from a undisclosed location once when he was on the run. So we had some pretty epic moments. I ended up uh, transitioning to the new series, Tokenize, at the start of 2024, and there was a few differences. Number one, we we've kind of focused on the North America as opposed to Coin Agenda was global. We did two of them in Dubai, and I think two of them in Monaco, and we did Singapore. To date, we've really been keeping. Not saying there's never going to be a tokenized in Dubai. I'd love to do it, but
We
right now,
would we would love to have you back. In fact, I've spoken, I think, at the last coin agenda here in Dubai.
yeah. No, I really loved it. It's just that it's a lot more expensive to put on, I've been just kind of focusing on the two events a year because I have a lot of other things going on. We'll see. Maybe the next bull market we'll do one in Dubai and one in Monaco because those
And
are
uh,
the,
and this time the coin agenda is happening at your own place called the Tiger Mansion, which earlier belonged to the legendary boxer
Mike Mike
Mike
Tyson. Yes.
Mike Tyson. In fact, my son pointed out that Mike Tyson, Michael Turpin, empty kind of goes.
Yeah, that's a nice coincidence. But bought that place in 2018, and been slowly kind of restoring it. And yeah, it's the place where Mike Tyson kept his tigers, which is why we call it Tiger Mansion. And it's 18,000 square feet, 2 acres. It's got an 80,000 gallon swimming pool, and it's a pretty iconic place. We rent it out for corporate retreats and events and things like that. But we also held the Tokenized conference there a couple of times now. And so historically, our global event has always been in Las Vegas. For multiple reasons, it's easy to get to. There's usually a conference to hang on. Usually, for the most part, it was around Money 2020, which is in October, and that's going to be the same this time. But we sort of took a break from Money 2020 during the Biden years because they stopped doing crypto. They basically were like, "Oh, crypto bad. Nobody uses crypto for payments. Let's stop doing crypto." And so I ended up moving it to earlier in the year, and I had 2 years in a row where we did it concurrent to the Bitcoin conference, which was held in Las Vegas earlier this year, as well as in 2025. Well, they've announced next year they're going to Nashville, and the rumors are that they're not going to come back to Vegas for a while. So decided to move it back, the global event, to October, when when now that stablecoins are hot for payments, guess what? Crypto's back on the agenda there, and so there are a number of crypto industry participants coming there, and that makes it easier for someone to just travel once and kind of attend both Tokenize and Money 2020, do meetings around both, etc. So yeah, Money 2020 is the 18th to the 20th. We're the 19th to the 18th to the 21st. We're the 19th to the 21st. We kick it off with a fundraiser gala for pro Bitcoin candidates. That's going to be available as a separate ticket, or it'll be included for paid attendees. And so that will be, we have a number of the key races in the midterms that'll help the pro Bitcoin, Republican Party. I mean, look, if you're pro Bitcoin and you're a Democrat, we'll help highlight you too. But right now, it seems like all of the party orange is party red, which is a shame, but that seems to be the case. And so we're highlighting pro Bitcoin and pro crypto candidates. And so we've got a number of people coming in. And it's going to be done in coordination with Stand With Crypto, which is the number one, pro crypto lobbying group, and the Digital Chamber, both friends of ours. And then the
Interesting.
main day of the conference, we have Dr. Patrick Byrne as a speaker. He just reconfirmed. He started T0 and Overstock, and so I'm going to have a fireside chat with him. And we've got a couple of other big speakers, which hopefully we'll be able to announce in the next week from three of the top protocols. And so it's always been envisioned as sort of a cross between like a Goldman Sachs style investor presentation conference. Like Goldman Sachs and other investor banks have high end events that highlight their portfolio companies, and they also will go and bring in their clients. But anybody else who's interested can go and buy a ticket as well, and a TED talk. And so it's a cross between kind of a Goldman Sachs conference on crypto, which they don't hold, so we do, and TED talks. So that's always been the vision. That's what we keep doing. And then the final day is the BitAngels global presentation. So BitAngels does presentations all over the world, and we take the best of the best and bring them to the global conference. So that's it. You can go to tokenizeconference.com and get information on it. And we still are taking a speaker and sponsor request as well.
And this time you're also having an AI angle to it. So tell us a little more about that. Is this the first time that you're bringing the AI angle to?
No, we did a standalone AI conference in San Francisco last year. This year we decided to wrap it into well, I guess actually our global conference this year was in April. So yes, this one is called Tokenize AI Entertainment and Politics. And those are the three main core areas. I guess payments too, because it is during Money 2020, so we'll have payments panels. But yes,
And
we
when
do
are
have.
you
I
bringing
say probably
tokenized?
about half of the content is going to be about decentralized AI.
And when are you bringing tokenized to Puerto Rico?
Right. So Tokenize Puerto Rico, originally called Coinage on the Caribbean, is the longest standing conference in the Caribbean. Was the first one in the Caribbean. In fact, goes back to March of 2017, when the price of Bitcoin was $900 and Ethereum was $30. By the way, the price of Bitcoin at the first Coin Agenda in Vegas, price was under $300. Um,
Wow.
yeah, and we took Bitcoin, yay! Um, and let's see. So the next one is going to be our 10th. It's going to be a big landmark, the 10th anniversary of Tokenize / Coin Agenda in Puerto Rico, and that's going to be the last 3 days of March, right after Easter, and immediately after the San Juan Social Cruise, where people want to come out and cruise the Caribbean for a week, and then end up with a 3 day, tokenized conference.
That is interesting, and we all are looking forward for it. And for everybody watching us, please remember that if you would like to know more about how the market works, right? Because uh, very early I said that if somebody can predict the market work, right, is a god. And clearly Michael Turpin here is called the crypto godfather. You should pick up his book from Amazon, which is the Bitcoin Super Cycle, because he has in depth analyzed and written about the four seasons of Bitcoin. And imagine if you have this book on your side, how easy it would be to make decisions on your financial portfolios, especially in Bitcoin. Michael, tell us a little more about the book in terms of when did you decide to write it, and what was your thought process on it? Because you could have gate kept the entire thing, right? And could have made a lot more, but then you chose to help everybody out there who could
Well,
perhaps buy your book.
yeah, I mean, I've been frustrated over the years that I tried to, talk friends of mine who were traditional investors into buying Bitcoin, going all the way back to 2013, and I've done presentations to TradFi, audiences. One that I talk about in the book was when I spoke in July of 2013 to the New York Angels. My friend Brian Cohen invited me. He was the chairman at the time. About 100 angels in the room, listening to pitches for startups that for the most part failed. I came up right after a woman drove up onto the stage with her bicycle and pitched a social media bicycle sharing app where you could share your bicycle riding time with others. And she raised $2 million. and nobody bought Bitcoin. I came up right afterwards and said I thought that at $66, Bitcoin was at a price, of like, kind of risk reward that was a no brainer, that was not going to zero. It had already gone up 6x that year, and that I thought it could reach as high as $10,000 by the end of the decade. I actually lowballed it, hit $20,000, not even halfway through the remainder of the decade. Yet nobody in the audience bought, not one. They actually said at the end of the decade that was their second biggest regret of not buying that of anything pitched at New York Angels. Number one was Pinterest, but nobody bought that either when it was $1.5 million market cap. And yeah, pre-seed, but it went out at 15 billion. But yeah, no. So basically, this isn't Bitcoin for dummies. It's explaining Bitcoin to traditional investors in language they can understand. Why does real estate go up? Most real estate investors know the cycles. Why does the stock market go up and down and up again? Most stock market investors understand the dynamics of the cycles. They don't understand Bitcoin. They don't understand. They just see Warren Buffett saying it's rat poison squared and all this stuff. And so I understand that it's not magic sauce. It's there's fundamentals behind it, and that's what the book's about. It explains the genesis of it, why it exists, the whole path from the cypherpunks to the Satoshi white paper. I include the white paper and I annotate it. And then I talk about every cycle, what happened, and I come up with explaining my thesis that I came up with in 2015, the 4 seasons of Bitcoin, which is what I originally wanted to call the book, but my publisher liked Bitcoin Supercycle better, which is another part of the thesis. 4 seasons of Bitcoin simply is Satoshi, in his early writings said that as long as the amount of new money coming into Bitcoin exceeded the amount of new coins being mined, the price had to go up. It's math. Supply and demand, pure and simple. And so far, that has been true. First having $12, second having $670, third having $8,700, fourth having $64,000, and next having will be higher. As long as the amount of new money coming in is more than the new coins being mined. And they're such a small number now. Which frustrates me when people say, well, because it's such a small number, it's irrelevant. It's like, no, it's not. The small number isn't compared to last cycle. It's compared to new demand. And as long as the new demand over the next 4 years is more than less than 1%, which is, or actually 4%, right? Because it's over a 4-year period. Then, no, actually it would be 1%. That's right. Because we only have 5% left over 115 years. So our annual inflation next time is going to be 0.44%. So that's only barely 1.5% for the entire 4-year period. You think we're not going to have more than 1% of new demand between 2028 and 2032? And that's where the concept of the super cycle occurs, because we've had diminishing returns so far every cycle in terms of up 100x, down at 85%, up 30x, down at 83%, up 8x, down 75%, up 2x, down 55%. And if you keep that diminishing returns, which happens in most models that rely on the law of large numbers, then you'd never get to $1 million, right? Because next time, we'd only go up maybe 30%, and the next time after that, maybe 10%. Well, how are you going to get to $1 million if it's a flat market forever? And what's going to disrupt that, what's going to modify the quadrants of the Bitcoin spring, summer, fall, and winter that have happened religiously, cycle after cycle, is where Bitcoin spring is flat, Bitcoin summer pops, the bubble pops, that's Bitcoin fall, drops, and then Bitcoin winter takes us up, and that's where we are now into the next spring, is going to be the technology effect of new markets, which has been called several names, and they all kind of behave the same. One's called the S-curve cycle of adoption, where you end up starting down here, and then boom, you go up when the mainstream gets involved, and then it kind of sort of evens out. That was also described by Jeffrey Moore in Crossing the Chasm, the Gartner hype cycle. I mean, all these things talk about a very similar phenomena where it takes forever for something to get known at all, and it's all the early adopters. And then you have this little gap until all of a sudden the early mainstream gets involved, and then it goes up like a rocket ship. And the early mainstream for crypto is ETFs, ETFs, and public companies like Strategy, because the early adopters, we're the crazy guys, right? We're the ones that had to go and figure out how to use hardware wallets, how to go and buy things on the Mount Gox if you go back that far, and the average investor, 40-year-old couple who's got a home mortgage and like a 401k, they're not going to go and deal with that. They're going to be like, can I buy it in my Charles Schwab account? Well, yes, now you can.
And thanks to OGs like you for kind of holding the fort for everybody out there. Because if you guys wouldn't have taken a stand, if you guys would have worked hard in terms of pushing Bitcoin, I doubt it would have reached to where it is today. It might would have reached, but it would have taken a long, long time. It wouldn't have happened in about close to 10 years. So big respect, big gratitude to you and to the entire OG team out there. And I hope to meet the entire OG gang at your event at Tokenized.
Thank you.
Thank you so much.
We'll see you this coming
Boys and
week.
girls, yes, I hope this week is better. And everybody watching out there, do remember to check out tokenized.com and the book, Bitcoin.
Tokenizedconference.com. Yeah.
Sorry, tokenizedconference.com and the book, which is Bitcoin Supercycle. You can also visit the website bitcoinsupercycle.ai. Thank
Okay.
you.
Thank you. Bye bye.